Hello and welcome. Today's date would be that of June the 26th, year 2000 plus 10 plus 8. This is the Crypto Day Morning. My name is Derek. Like always, everything investment wise is within your own risk, own reward. Let's talk about trend reversal. As well as the more often levels are tested, the more likely it's taken out. So beautiful uptrend. So the reversal for such is stage 1, band flatten out. Occurs here. Stage 2, establish support. Stage 3, come back to the correctionary move and pass it, of course. Correctionary move is back to the 18 average. Passing it on a bearish level is leaving it to the downside, which it did. Thus, that set up test number 2, or the movement to make stage 4, break, establish support. But it didn't do that. So thus, it successfully, on a bear market, corrected this because it did not get past the 18 and did not reverse the trend. It fell below it, which is setting up the current test right now. Test number 3 of the 6,000 area. Again, the more likely you test it, the more likely it's taken out. But since stage 2, this has been test 1 here, test 2 here. So if it does pass the test on a bullish level, thus it has to do the next test, which is the 18 average. It would be test number 3 because it did so here and it failed. It had a reshot here and it failed. So you can say the same thing again, just as it's really more, it's cautious that this is taken out now, because of the multiple tests in this area, that if it does get back to the 18 average, which is in the range of, we got 7,070 to 8,180. So between 7,000 and like 8,200. If it gets in there, then that is going to be a very cautious level on a bearish front, because now you're having a larger test number, that of 3, to an area, and failing that on a bearish level, thus passing it on a bullish level, would mean getting to the 18 average of highs, but of course not falling below the 18. So it might get up to 8, could even go down here. If it does something like that, that would be a passing of the test for the bulls and a failing of the test on the bearish level. Again, one more time, breaking down, not one more time, and probably more to come. Breaking down below the support, next key level I am looking at is for price action to go to 3,000 and most likely pierce below that. Piercing below would be an extra $200 to $300, so approximately. And it could even do more to 25 and then have a huge move higher. That is the technical analysis that I use because Fibonacci has worked so well for me in the past. And in this situation here, where we have the 23.6 working like it's, I'm not going to say like it's supposed to, but like it usually does, I'm going to keep using that level within that market. So 3,000, of course, is a 38.2% down move. And as I look at it, it's either going to, this test has got to be one way or another. So it basically works out, support test is 6,000, resistance test right now is 82. Because what this is doing every single time that it is unable to get below the 18 because it's declining, that means the area in which it needs to test is lower. For the first time, it had to get above like 13,500. It didn't even get there. Then it got to the high upper band this time, which was 10,000, which was lower, didn't get above. And now that it's only over 8,000, that if it's able to get and hold above that, it's pretty much in the area of 10. But it would tell you that with all of the attempts that was made and the probability of taking this down and a failure to do so, keyword failure, oftentimes in markets, failed moves create fast moves in the opposite direction. And I see this happen a lot with setups as well. So we have a high probable setup going lower. And that means in the unprobable event that that doesn't occur, you can expect a decent sized rally to transpire thereafter. So I'd like to thank you for tuning in to today's video, and have yourself a great day. Bye-bye.